Hello, today we are going to record October 2022 paper question number 2. So, Alexandra's bookkeeper extracted the following trial balance on 30th September 2022. Alexandra is aware that the bookkeeper had made some errors in drafting. So, they have already prepared a trial balance, but it is with errors. So the question is complete the corrected trial balance at 30th September 2022. Now let's understand why this trial balance was wrong, as some of the parameters were shifted from the debit and the credit side. If you see first, so you will apply the concept of dead click concept and understand where the debit and the credit entry has to go. For example, the first one is a capital. Okay, the capital, okay, we can see here capital is on the credit side, so it is a correct side. So you are going to go and place the same amount on the in the correct in the trial balance. Okay, so it is 70,000. Then you have drawings. Okay, drawings has to appear on the debit side, so this is also on the has been a correct entry. Okay, only some entries would have gone wrong, so he's asking us to re-prepare. Then the revenue. Okay, revenue will act like an income in the income statement, so it is going to appear on the credit side, so you put that. Okay, so revenue is this much. Then it is purchases. It is acting like less income on the opposite side of the purchases, so it should appear on the debit side, so this entry is also correct, so let's put it on the correct side. Okay, then we have return outwards. Okay, return outwards is purchases return. Okay, outwards, so this is like less of the purchases returns. Okay, it is a charge, it's an expense, so you will have to put it on the credit side. Okay, it is like an income. Okay, return outwards, return outwards is nothing but the purchases returns. Okay, so it is purchases return, and so it is on the opposite side of purchases, so 1900 should have been on the like an on the opposite side of purchases. And then you have the inventory. Okay, inventory is like an asset. Okay, so inventory is an asset, so it is on the correct side, it is 27,500. Okay, so the inventory is okay, it is going to appear as an asset, or it is also less, it is a opposite side of income. Okay, so then we have bank overdraft. We know it is a liability, so liability is going to appear on the credit side. And then we have the wages. Wages is an expense. Okay, we know it is going to appear on the debit side, so put it there. Okay, wages. And then you had rent payable. Okay, the rent payable was also an expense, and it should appear on the debit side, so but they have put it on the credit side, so you remove it and you put it on the debit side. Okay, then rent receivable will become in income. Okay, so the rent receivable is going to act as an income. So this 4750, it should have appeared on the credit side. So let's put here that it should appear as an income and it should be on the credit side. Electricity and water, it's an expense on the debit side, so it is on the correct, you will enter it on the correct side. Then you have sundry expenses, which is also on the correct side. Okay, it's on the debit. So sundry expenses is debit. Then you have non-current assets. It's an asset. Okay, so we see that assets is also on the debit side. So you are going to put it here. Okay, on the debit side. So it has also been correctly stated. Then you have provision for depreciation. Okay, provision for depreciation of non-current assets. This is an accumulated depreciation, so it's going to appear on the opposite side of asset because we are less provisions we do, so it is going to be appearing on the opposite side of asset. Okay, so this was 88, sorry. And then you have the discount allowed. Discount allowed is an expense by the business, so you gave away some discounts, so it should appear on the debit side. Discount received was into the business, it acts as an income, so it should appear on the credit side. Okay, so it should have appeared on the as an income, and it is so yeah, the idea is you should be able to identify whether it is an expense, asset, drawings, credit, liability, income, capital. Okay, so then you can easily put it on the correct side of the current trial balance. Then trade receivables. Okay, it is an asset, so trade receivable is an asset, so it should appear on the debit side. Okay, then trade payables is a liability, so liabilities usually appear on the credit side. Then allowance for irrecoverable debt, credit side. Okay, so these are the things. So now let's add up all of the things. Okay, so 70,000 plus, so 70,000 plus 205,000 plus 1900 plus 7950 plus 4750 plus 22,000 plus 4100 plus 7270 plus 800. So that value is 323,770. So let's write that. So 323,720 pounds. Now let's see on the other side, okay, whether it balances. Then we don't need the suspense account. So 11,400 plus 117,000 plus 27,500 plus 31,500 plus 9,000 plus 5,700 plus 18,750 plus 88,000 plus 1,920 plus 13,000. So that value is also equal to 323,770. So now let's add up everything. So 70,000, okay. So 70,000 plus 205,000 plus 1,900 plus 7,950 plus 4,750 plus 22,000 plus 4,100 plus 7270 plus 800. So that value is 323,720. So let's write the total value as 323,770. Now let's add on the other side and see if we need a suspense or not. So if it balances, you don't need a suspense account. So 11,400 plus 117,000 plus 27,500 plus 31,500 plus 9,000 plus 5,700 plus 18,750 plus 88,000 plus 1920 plus 13,000. So the value is 323,770. So it's the same one. So you will not need any. So hello, today we are going to solve October 2022 paper. Question number 2. The part A has been solved. Now this is a B question. Complete the table calculating the revised profit for the year ended 30th September 2022. So we have to correct the profit and prepare a revised profit for the year because there has been some errors. After the correction of trial balance, the bookkeeper completed the financial statements which showed the profit for this much. Okay, 5980. Alexandra, so let's that is what is given as at the beginning profit. Then she found, Alexandra then found that there had been some errors in the year end adjustments when preparing the financial statements. The inventory at 30th September 2022 was recorded in the financial statement as 23,600. The inventory count had been understated and should have been 26,100. So it is given here. Okay, so what the inventory, okay, it was understated. So the difference in inventory, 26,100 minus 23,600. So that value will be equal to, so that value is going to be equal to 2,500. So that is equal to 2,500. So this is a value, decrease in value of inventory that had been accounted. So it is going to lead to increase in profit. Okay, I should have stated more inventory. So 2,500. Okay, it is a part of profit, so I'm going to include it as 2,500. It will lead to increase in my profit. Then no adjustments had been made for the 2,000 rent receivable that was owing. So rent receivable, okay, is a part of income. Okay, so that plus increase in income. Okay, increase in income. So increase in income by about 2,000, it's going to increase your profit by 2,000. So it is going to lead to increase in income by the same profit by 2,000. No adjustments had been made to sundry expenses. So we will see whether it is an increase in expense or a decrease in expense. So accrued was at 700, you have to adjust. So plus 700, you have to do whatever was the sundry expenses. You were supposed to add 700, and anything that was prepaid you had to remove. So when you do that, okay, this difference is equal to plus 700 minus 240, that is 460. Okay, this is an increase in expense. Okay, this is regarded as increase in expense. So when there is an increase in expense, it is going to decrease in profit by the same amount. So it is going to cause a decrease in profit by the same amount. 460. Okay, then you had annual depreciation on non-current assets owned at the end of the year had been charged at the rate of 20% on cost when there should have been at 25% the cost. So let's calculate this. Okay, the annual depreciation, okay, the cost should have been charged at 20%. So the expense should have been at 2% okay of 2% of the 2% of depreciation expense. Okay, so 2% of depreciation expense. So we will have to remove that, right? So because it was charged wrong, and let's include 25% of the same expense. Okay, 25% of expense. So which means that the change in expense that have to be done for depreciation will be equal to 0.05 percentage of that expense. Okay, so that is equal to, there is an increase in expense. Okay, so which is around, let's see what was the depreciation chart that needs to be included. So here it has on non-current asset, so you include 0.05 percentage on 88,000. Okay, that is equal to 4,400. So you have to remove the 2% which you had charged, sorry, 20% which you had charged, and you have to include 25% of that expense depreciation. So there will be a change of 0.05 increase in that expense. So if I calculate what is the cost, okay, that will be equal to 4,400. So this is going to lead to my decrease in profit. Okay, because there has been increase in expense 4,400. Okay, then what happens is no adjustments had been made to the allowance for irrecoverable debt that should have been maintained at 4% of trade receivables. So there is already an allowance for irrecoverable debt. Okay, so if it was done, okay, they had to adjust this allowance. So for example, the trade receivables, okay, the trade receivables were at 13,000. So 4% of 13,000, that's the trade receivables. So the value is going to be equal to, so 4% of trade receivables is 520, but the provision made was 500. So you have to adjust, means you have to decrease from 800. Okay, so 800 minus 520, that is equal to 280. Okay, so there should have been a decrease in expense. This is going to lead to decrease in expense. Okay, decrease in expense. This would have caused a decrease in expense. Okay, so I'm going to call it as it is going to lead as an income. Okay, so this 280, okay, the difference would have caused an increase in expense, would have caused decrease in expense, which becomes as an income. Okay, and so it will lead to increase in profit because no adjustment had been made. He says that then no provision had been made for an injury. Okay, no provision had been made for injury claim from one of the Alexandra's employees. The injury claim was this much, so it was still left with the business. So this injury claim was not taken, or the expense was not taken away, so this will become as an income. So income, okay, income for the business will be at around 10 times 190 Okay, he says that 10 weeks it is 190. The charge they would have given is 190 plus bonus of 140. So if you add those two, 190 times 10 plus, okay, 190 times 10 plus 140, that should be equal to 1900 plus 140, that is 2040. Okay, this becomes an income because it has not been claimed, and so this would have caused an increase in profit. Okay, 2040 increase. So now let's adjust the profit. Okay, let's add up on both the sides. 2500 plus 2000 plus 280. So when you add up, it is equal to 4780. Then let's add up on this side. It is 460 plus 4400 plus 2040. Okay, so when you add up, it is going to be equal to 6900. So now this difference, okay, there is an increase in profit by 6900 and a decrease by 470. So 5980 plus 6900 minus 4780. So that value will be equal to 3860. So that value is going to be equal to 3860 pounds. Okay. Hello, today we are going to prepare October 2022 paper, question number 2, Alexandra's business, and it is question number part C. Prepare the following ledger accounts for the year ended 30th September 2022. So it is a rent payable account and preparation of rent receivable account. They have given some information which is available from her, from Alexandra's ledger account. So let's prepare the rent payable account. Okay, so the rent payable account will act as an expense account. Okay, but they have given already some information regarding the balances, so we have to just take those balances and we have to understand how much will go into the income statement. So at the beginning, okay, at the beginning on 1st October, balance brought down was 650 credit. So we have to go, because there it was already on the credit, we have to take it on the credit side. Balance BD, okay, it is equal to 650. So just put 650. And then at the ending balance, okay, they have already given the ending balance. The ending balance as on 30th September or 1st October, okay, 2022. So the ending balance as on 1st October 2022, balance brought down, it was also credit, so I am going to write it on the credit side. Okay, usually it's an expense account, it should have had on the debit side. Okay, now some payments were received by check. So some payments were received by check, so that let's write that. So bank, it was 9650. So 9650. Okay, 9650 it was received. And then it was paid. Okay, so receipt by check, okay, or the payments by check, payable. So you made some payments to the bank towards the rent. So now let's calculate. So because let's put this balance carried down, okay, balance carried down on 30th September 2022. So that you have it is known, you have to include just like that. So let's include that, and then you will have the income statement. Okay, how much should go into the income statement? So you add up 9650 plus 600. So the value is going to be 10,250. So 10,250. So this amount has to be the same on both the sides. So 10,250 minus 650 you have to do. So 10,250 minus 650, it will give you 9,600. So 9,600. So let's include that. This is the thing. Then we have the rent receivable account. Okay, rent receivable account. Let's prepare that from the information given. Now here we can see the balance brought down on 1st October 2021. So the balance brought down, let's write. So receivable is an income account, okay, and but it has stated that it is a debit of 250. Okay, so October balance brought down was 250. 250. Then they are saying at the ending balance we have to calculate, but the transfer to the income statement has been done. Receipts by the check was 5,000. So the receipt by the check through the bank was around 5,000. So let's write that. And then income statement is given. So income statement given, it is 6750. Now from this let's calculate what was the balance brought down on 30th, balance carried down and brought down on 30th September 2022 and as on 1st October 2022. Okay, so let's add 6750 plus 250, it is equal to 7,000. Okay, so this 7,000 total has to be the same on both the sides. So let's write that 7,000 minus 5,000, which is equal to 2,000. So that is the balance that was carried forward. So 2,000. So some of it was transferred to the income statement, that was 6750. So the remaining will go as a balance. Okay, 2,000 will go will be. Hello, today we are going to solve October 2022 paper question number 2. question number 2, and this is the part D, okay, of the question. The part D of the question, explain the following terms, giving one example of how each term would be applied when preparing the financial statements of Alexandra's business. Now, materiality concept. Materiality concept is going to state that all the materials, okay, all the material facts. Example, if I want machinery provision, it must be included as a part of accounting process. But certain provisions, like if I want to create a stationery provision, it is an immaterial fact which doesn't have significant information and it will not affect the business decision, okay, which have insignificant information, as it will not affect any business decision, okay. It could be left out, okay, I can leave it out. So that, for example, so such small inventory cost is included, the cost alone is included in the year of purchase, but you will need not spread the usage, okay, usage cost over a period of use. So you just include the cost in the same year and continue to use that material for the forthcoming year. Then business entity concept, okay. Usually in what do, we create machinery provision because we understand that the thing asset will deteriorate and we include it as expense. But for small inventories you can ignore any provision you are going to create. Then business entity concept, the financial transactions of the business, it must be kept separate from the financial transactions of the owner. Let's say business draws inventory for his own use, then you should record it as drawings, okay. And if he is drawing money from the bank, this should also be recorded as drawings in the accounts. Money measurement concept, it says that some assets cannot be measured in monetary terms. For example, people's skill, okay, people's motivation, all this thing cannot be recorded in the financial statement, so don't include such things in the statement of financial position. Then annual depreciation charge, we know it is some expense, okay, which is included in the financial statements for the material, okay, which are material things, and it is a charge that is included as an expense, okay, as asset usage will reduce its value over a long period of time. So why do we include depreciation? We know that the material value is going to lose because either because of obsolescence, wear and tear. So you will use certain methods like reducing balance method or straight line method to calculate a depreciation charge and consistently apply year on year. Then you will have to use allowance for irrecoverable debt, okay. It states that you can include a percentage of trade receivables as an expense, and imagine that the business is not going to receive all the trade receivables in the year, so you create a provision for irrecoverable debt, okay, and that could be included as expense in the financial statements. Then accounting ethics, it states that business should report any information, it should report with any information about, say for example, any lawsuits presents, any changes in the current assets that was made, any barriers, okay, to the business in the future, all should be reported with honesty and integrity. It should not hide it, it should not withhold such information, because this could be a misleading or it could lead to inaccuracy financial statements, and eventually in the future the stakeholders might see it. So you should not include, you should include every information, relevant information like lawsuits, changes in the value of the non-current assets, okay, all such things should be included in the financial statements, okay, you should mention it. Then the next question is 2E, evaluate the statement made by Alexandra. A friend of Alexandra, stated that a balanced trial balance must ensure that the business transactions in the books of account have been recorded correctly. Was she correct? So yes, trial balance will ensure that the books have been recorded correctly. We know that it is a part of control procedure. So once you prepare trial balance, we know, and it balances, it ensures that there has been a correct double entry, and we also understand that it is arithmetically correct, calculation has been done. But however, sometimes it might not show certain errors. For example, if something has been omitted, then there would be no mention of double entry. Okay, I cannot say there was a double entry at all. It was altogether the credit and debit entry was left. And also some of the errors like principal, commission, compensation, reversal, okay, reversal errors, or it would compensate, or it would just reverse the current and debit entries, two of them, and still you will not recognize that error in the trial balance. So some errors cannot be recognized by trial balance. So in conclusion, you can just say yes, it is one of the methods to check the accuracy of double entry. But apart from that, she should also include other control procedures like control account preparation, and you should adjust for any error corrections. Okay, all this will help you to get a correct, correct account of books. Okay.